We have some really good news. James, who is a skeptical Tesla stock bull, now says that the minimum expectations for the deliveries of this quarter are at 430,000 for him. And I think just on March 21st, that was maybe 420,000, although he didn't say it exactly like that. That's what I assume. So it appears that his minimum estimate has increased by 10,000. And the consensus, I believe, is still at 420,000. So his minimum expectations now exceed the consensus by quite a bit. His lowest prediction number is not just 2,000 vehicles above the consensus, so I would say it's quite a bit. His bullish post comes right after posting this. Over 160 Teslas registered in Norway today, a Sunday. And for example, last Sunday, only Teslas were registered out of all of the electric vehicles in Norway. So Tesla is pushing hard at the end of this quarter. And you will love this, although take this one with a grain of salt, as I'm not able to verify this, but maybe there is substance behind this. According to Jason Young, headline news in China. Chinese auto industry complains that Tesla Shanghai's high salaries have reduced their competitiveness. They are requesting that Tesla reduce the wages of its employees in China by about half. I can't verify this story, but if this is true, that is not just hilarious, but also it shows how these other companies were hit with two bombs. One, price cuts by Tesla, forcing them to lower their prices even more, forcing them into bigger losses. And then number two, Tesla pays their employees more and is still able to make a profit from the vehicles. But the other automakers, they have none of this going on for them. Let's take a look at the newest Norway data from Roland here. Clearly, this month is the best month ever that we had, and the month is not over yet. And you can see that the vehicles that used to be delivered to Norway used to come from United States, then they mostly switched to China, and now more and more are made in Germany in Giga Berlin. Norway is also, of course, about to have the best quarter ever. We are already at 7,700 vehicles for this quarter. And the one to beat is the last quarter, Q4, which was at 9,000. So we are very close to beating it, and the month is not over. And assuming that this data transfers to other big countries in Europe, we are going to have a record quarter. We'll see very soon what is actually going on. Leo Cogwin, the all-in Tesla stock investor, a billionaire, has this to say. He calls for a buyback again. He calls for a buyback, and this time he calls for a huge buyback. But he says because Tesla has a huge line of credit and over $20 billion of cash, and he also expects $2 billion of free cash flow from Q1, I would prefer to wait until we see the actual results, and then we can maybe talk a little bit more about what we are going to do with all of that cash. I think no one really knows for sure what we are going to see in the Q1 earnings report. Hopefully, it is going to be really good, but hope is not a strategy, so I would rather see it before making any conclusions before seeing it. And he then says that the board of directors should decide on a $10 to $15 billion buyback right now because the Q1 deliveries are going to be amazing, which, yeah, it's certainly looking towards that direction currently. And Leo believes that Tesla's cash flow is recession-proof, which hopefully is the case, although Tesla has not really gone through a very bad recession, unless you count 2020, but I mean an actual prolonged market crash. We have not gone through that yet, so we don't really know for sure with 100% certainty that Tesla is not going to struggle through a recession. I mean, Elon himself thinks that if we do have a bad recession, Tesla may need to cut prices to a point where Tesla would break even. And then, of course, we would increase the prices back up. And then Leo gives his credentials. He manages or at least he founded and is the chairman of a company that has over $10 billion of sales per year. There is an interesting suggestion though, right here. You should buy a blue check mark first. May not be a bad idea. I think that makes sense. And Leo here also gives more reasoning why he believes that a buyback would be necessary. The one, meaning Elon Musk, shaped Tesla into a lean and mean machine with exponentially growing free cash flows. To stay lean and mean, Tesla must buy back shares. If not, Tesla will, through time, become fat and complacent, and its managers will become masters, but shareholders will become slaves. They grant themselves big benefits plus stock options. I do like that particular reasoning, but we also know that Tesla is going to be building 2 factories, not just the factory in Mexico, but also another factory together with it. So how much money exactly do we need to have for all of these expenditures? And if we spend most of the cash that we currently have, and then Tesla decides to fund a big project, but now we have to raise money, and because the whole financial system is in crisis, there's no liquidity, no one wants to give anyone any money, and now we have to grow slower because of that, I would not like that. I think eventually Tesla will need to do a buyback or issue a dividend, just maybe not this year yet. I mean, they can announce it this year if they would like, but maybe don't do it right now yet. Drive Tesla Canada is reporting that Tesla is offering 10,000 free supercharger credits for Model S and X buyers in the end of a quarter push. The inventory in the US looks fairly good, although the Model X inventory is fairly elevated. And with less shipments from China now, because the quarter is ending, the inventory is starting to come down a little bit faster in Europe. You don't see those spikes anymore. The new FSD beta version is rolling out to a lot more people. If you don't have yours yet, you should go check and see if you got yours now. The new Model S's are now showing up on China's streets. The feedback about the new FSD version is generally positive, although there is certainly some negative as well, going through all of the comments, but that is expected. But certainly the general sense of the comments is feels more natural, no freak out breaking. However, if you ever see anyone's videos about FSD, make sure you know what mode is the car set on. For example, my first drive was pretty underwhelming, speaking about the newest version. The car didn't seem confident at about 50% of the intersections, but then I saw the car reset to chill mode after every update. So I'm not sure what to think now. So make sure you are not set to chill, you are set to either aggressive or standard at least. Or if you do prefer the chill mode, then when you compare one video with another, you have to keep in mind, oh, this one is not in the same mode, so therefore the comparison is not going to be fair. Gary Black says that the odds of a recession are 50-50. I think before he thought that the odds were lower. When I say before, I mean months earlier. But it appears to me that he still thinks the recession is going to be shallow if we do have one. Many like to talk about this chart. The majority of the decline in these bear markets occurred after the Fed's pivot. And there's a similar comment here as well. A dovish Fed isn't as good news as bulls would like. In fact, it would be super bearish news, meaning that the Fed was forced to be dovish. But Gary Black says, not if the Fed gets in front of this to prevent the economy from going into recession. Dovish Feds in the past were in response to a recession. We also have a minor accident from Cruise, which is owned by GM. Whoops. We also have a pretty interesting highlight from Chuck Cook.
Reading my bumper sticker that says Robotaxi in training. Cat here on the road, and I think it was braking. Cat on the road, but I tapped the brakes just because I wasn't sure. That might be interesting to look at in the CAN bus data, whether or not it was decelerating before I hit the brake.
I'm happy that Tesla updated visualization so that you know exactly when the vehicle is braking. And as you can see right here, the car was indeed braking and it did see the cat. So, Dan O'Dowd, what do you say about this? And this right here, it looks like a line. So I assume it was going to stop right here, which would have been a pretty sudden, or I guess maybe not that sudden. There is quite a bit of distance and he was only going at 20 miles an hour. So it would be somewhat sudden, but not really uncomfortable. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.